This morning, the Trump tariffs were overruled by the Supreme Court, and we saw an interesting response. Initially, the stock market has moved up higher in response to this, and so I wanted to break down how this impacts markets, as I've seen a lot of people asking this question. So to help with this, I put together a little bit of a visual on this tariff being overruled circumstance and what this means. So the Supreme Court overruled that the tariffs enacted by the Trump administration were overstepping his limits as president. And so the question is, what happens next? And how does it impact markets? Well, there's a couple positives and there's a couple negatives that I think are worth discussing. So first of all, the positives. The market likes the idea that this move by the Supreme Court kind of puts a ceiling on tariff risks. Think about if you're an investor and you see the Supreme Court kind of smacking this down here, you're like, okay, so actually maybe tariffs are only going to go so far. Maybe there's a cap or a limit on how much tariffs could sway my entire portfolio in the next month. I think the market also sees this as a bit of a clearing event. We've been on hold and wondering about what the Supreme Court was going to do for a while. And so a lot of times when you have these big announcements, it's like, okay, the worst case scenario might be behind us. And so, we're seeing a little bit of positives. On the negative side, we are seeing US interest rates move higher or yields moving higher in response to this. Because although some people like or dislike the idea around the tariff strategy, there is still a big amount of money that was coming in through those tariffs. And so now the question is, who will pay for the refunds and the missing kind of revenue that was being generated? How do we pay for that? Well, the answer is the taxpayer. The Treasury will have to print that money, and who pays for it? Well, we do. So bond investors are moving yields higher. Let me show you. Here's a look at the 10-year yield from the US, which is moving higher in response to this. That's telling you that bond investors are saying, oh, okay, so you're going to do a lot of money printing here, so we're going to have to raise the rate at which we want to be paid interest. And this is, of course, impactful to everyday Americans because this sends like mortgage rates higher, etc. Borrowing rates are likely to be going higher in response to this because, again, there's a big bill that has to get paid now. The other negative, I guess this is up to your personal opinion, but is that the administration will likely find other workarounds or a backup plan to still enact a lot of the same ideas without doing it the same way. And Trump kind of alluded to this already. He called the Supreme Court's ruling on this a disgrace, and he also said that he has a backup plan in mind already. So we'll see what happens next with all of that. There's likely to be some volatility. I discussed this and more on today's Market Insights podcast. If you want to check out the full podcast episode, I'll leave it linked to my profile.